Okay, folks, welcome to Thursday Night Stock Charts Live. Franklin, hello. All right, what we're going to talk about tonight is obviously the weekly charts. We're going to go over some monthly charts, and we're going to talk a bit about gold, and in particular the miners, the mining stocks, relative to technology and how they are dramatically underperforming relative correlations with the velocity of money and of inflation. So I have a bunch of charts to go over there. We'll talk about the Federal Reserve's balance sheet. And before we begin, folks, let's first give a shout out to our friends over at TrendSpider. They just hit 150,000 new subscribers on Twitter. Congrats to them. We're going to be using their software tonight. Automate your grunt work, speed up your technical analysis with their charting software. Improve your accuracy by using their trade alerts. I'm going to show you how to use those trade alerts tonight. Time your trades with precisions with, again, precisions. Time your trades with precision with their trade alerts and find winning chart setups with their scanners. 7-day free trial offer. Use the link below. Don't use my discount code. They're doing a Labor Day sale. Use whatever discount code they're offering right now. It's on their website. Let's take a look at it. Pricing. I saw it on, yeah, here it is. Just check out. Use the link below. It'll take you over to the checkout page, Labor Day sale, 40% off. It actually beats my discount. All right, let's get to it. I want to talk a little bit about gold. And in fact, let's bring up the monthly chart of gold. Hey, Joe. We'll take a look at it for you, pal. Monthly chart of gold. We're going to talk quite a bit about gold tonight and the miners. And what we're seeing here, I hate these Stokes, but I'm loving this setup on the chart. We have a massive, massive cup with handle formation. I don't think that we're going to break out this month. We may. Tomorrow we have non-farm payrolls. It's certainly a number if it comes out very, very bad. And you see earnings rise. So you have inflation on the wage level, the CPI, PCE, all showing inflationary data, yet your jobs created is declining. Non-farm payrolls are declining. That's stagflation. That's bad stuff. So I don't think at current we're going to break out this month. I'm basing a lot of that opinion on the monthly stochastics, which continue to trend down below the 50 mark. You never know. Gold is a commodity. It could shock you in either direction. But it looks as though this is a very, very bullish chart. It's been a horrible year for gold. What are we down so far on the year? Down 4.4%. Horrible relative to the S&P 500, the NASDAQ, etc. Tommy. CCJ. Okay. So gold looking good here from a macro perspective. Going back to this analysis, that I just want to go over a few of these slides. I'm going to scroll through a lot of this because a lot of it's not necessarily necessary. I'm going to begin with slide number 8. And this is gold in yield in real prices. And here you have in red U.S. 5-year real yield adjusted for inflation moving up higher. And you can see that historically they have traded in tandem, yet gold in white is diverging, a bearish divergence. It's like a coiled spring getting ready to play catch up with the 5-year real yield. And here's a note here. Real rates tend to lead the way for precious metals, particularly gold. That's slide 5. I'm going to jump back up to slide 6 for a moment. And I want to show you money supply, which continues to rip through the ceiling, and the federal deficit, which continues to get walloped as a percentage of our GDP. So this is horrible, horrible fiscal financial conditions for the United States. Going back to slide 7 for a moment, take a look at the price of gold and how much the central banks are building assets in gold. Just think about what would happen. There's a chart down here. I wasn't going to talk about this, but let's talk about it. If I can find it. Here. Here's the capitalization of Apple. $2.219 trillion. The entire market capitalization of the precious metal industry is $580 billion. Think about it. Think about if 1% of equity owners moved into precious metals and what that would do for the gold mining stocks. Getting back to our previously scheduled programming, I'm going to share this, folks, so you have it. Chart 5. We don't really need to go over it. Oh, you know what? Yeah, we should go over that. So this is a good chart. Commodities in white. You can see that they've been doing very, very well for quite some time now. But where you had a correlation in the commodity index and mining labor market, that has really significantly diverged in the past. And the last time you saw a real correlation between the two was back in the 2000s after 9/11, and you had that rally in gold and in the commodity complex. So moving on down. Slide 25. So typically what happens, and this happened most recently back in the dot-com bubble, and I believe the financial crisis as well, where you had a major sell-off in the equity markets. And initially, the miners went down along with the rest of stocks. However, though, was that ultimately the first group to rally were the mining stocks. So here's Home Stake Mining. This is an individual name, I guess, because they didn't have indexes back then, during the Great Depression. So Home Stake Mining in yellow, and here's the Great Depression. And remember, this is a deflationary depression, right? So it wasn't an inflationary depression. And here they even have gold mining companies acted as a counter-cyclical during the credit deflationary bust of the Great Depression. Fast forward to Nixon taking this off the gold standard. In yellow, we have the Barron's Gold Mining Index. Rallied very strong. And in blue, you have the Barron's Gold Mining Index relative to the S&P 500. And you can see that gold stocks did very, very well during that time frame, that inflationary time frame. Whereas the S&P 500 did very poorly in real terms, meaning adjusted for inflation. The tech bust, this is what I mentioned earlier. Technology went bust initially. You have gold stocks in yellow. tech stocks, what do they have here? NASDAQ Composite in blue. Initially, they all went down in tandem, yet while technology remained in a bear market for a couple of years, it was gold stocks that led the charge out. Gold and silver, I should say. 28. Here are commodities to equities, the ratio, and how undervalued, how underappreciated commodities are relative to equities right now. We are at all-time record lows. So if you're wondering, when is it time to get involved with gold stocks, gold mining stocks, silver stocks? Right now. Right now. Consult your financial advisor, of course. But just take a look at this inverse correlation here. I mean, wow. Very, very cheap. Silver is in particular very, very cheap historically. What's my next chart here? That was 28. 32 we're skipping to. Here's the expectation of GDXJ. GDXJ, which we own, in yellow. Inflation expectations in blue. You're seeing both of them begin to tick up. And really, right now, the gold mining stocks are lagging. And here, gold mining stocks follow inflation expectation. Junior exploration stocks are highly undervalued after a 10-year bear market. That's 32, 33. Here's how they're understating CPI. They don't measure CPI the way they did back in the 1970s, 1980s. They changed it. So the big thing that they changed was how they measure the cost of housing. And what they do is they pretend that, if they were an owner of the house, like the owner equivalent cost of housing, basically, I'm not going to get into it, they understate it. So really what this is showing, in real terms, housing is a lot more expensive than what's being reflected in the CPI in yellow. We have a couple more here. 41. Okay. This really blew my mind. Gold mining free cash flow is positive. I mean, it's really, really strong, and it's been positive for a couple of years. The gold mining stocks are notoriously inefficient with their capital, but they've really gotten their act together. They're lean, mean, and they are really, really managing their cash flow very, very well. And in fact, when you take a look, this is the gold mining stocks versus tech stocks free cash flow. You now have gold mining stocks which are throwing off more cash than tech stocks. You had a very, very poor correlation for a long time. Now the gold mining stocks are really beginning to outperform these tech stocks on a cash flow basis. And you can see here that gold mining supply, gold supplies are dropping off of a cliff. So what does that mean? It means that at some point in time, you're going to have these majors, as reflected in the GDX. They have a lot of cash. They're going to need new mines. So what are they going to do? They're going to go shopping in the junior miner space. And they're going to be, that's going to be the fuse that gets lit to send this market, this gold mining market, this rally ripping up higher. And I'm saying gold mining stocks. I should say the mining stocks, precious metal mining stocks, to include silver. And that's pretty much it. I mean, I think that we have a lot of opportunity here in the gold mining space. I love this presentation that was put together, so I figured I'd share it with you. If you're just joining in, I put the link in the chat box, so if you want to check it out. What else do we have here? Okay, the Fed's balance sheet. It didn't grow a huge amount over last week, but it continues to grow. So money continues to get printed. Remember that tomorrow we have the jobs report. And if we get a very weak jobs report, the Federal Reserve can't do anything. And remember what Fed Chair Powell said the other day over in that Jackson Hole summit, which was on Zoom. He mentioned employment, the employment market, COVID, as the reasons why he doesn't want to raise rates, despite the fact that we have 5.4% unemployment, which is technically full employment. Okay. He's boxed into a corner. So he knows the minute he takes his foot off the pedal here, the equity markets go boom. But the problem that the equity markets may have, I want to show you this chart. And this is a chart of the China index. It's from the New York Stock Exchange. And we've known that the ADRs of Chinese stocks in the United States, Didi, Alibaba, you name it, they've been getting hammered. And they probably are going to longer term get hammered. You're going to have counter trend rallies, sure. But longer term, they're going to continue to get hammered because they're not investable. They're just not investable. But when you take a look here, I'm getting off into the weeds. When you take a look at this chart, in red is the CZH. Again, that is the China index. And you take a look at this line here in gray. That's the S&P 500. And you could see that the correlation between the two is eerie. I mean, very, very eerie. Yet, back in February of this year, the Chinese stock market took a nosedive. Yet, the S&P 500 continues to rally and rally strong and has not reacted in any way to the sell-off over in China. And you can see here that the correlation was at one time, like back here, the correlation between the two, like 98% of the time they traded in tandem. Now, they trade in tandem about 20% of the time. So, at some point, this is going to have to get resolved. And the question becomes, what's it going to be? Are Chinese stocks going to rally to catch up with the S&P 500? Or is the S&P 500 going to dump to play catch up with Chinese stocks? I have my opinions, and I think everybody knows them. So keep this in mind moving forward. Taking a look at, and that was a monthly chart. Now moving over into the weekly charts. Let's go to some comments here. A lot of people joined in. Tom, hello. At some point, OZ will replace these papers. Okay. PLTR is the only tech I will like due to 50. There you go. That was a great move on their part. Talon, what is the ticker for safety in gold? I'm not sure what that means. Is that an individual company? 480 Shenanigans, hello. AA Alcoa breaking out. Aluminum, ripping. Aluminum's doing really well. Sleepy Alcoa, not sleeping anymore. Beautiful run here. Let's take a look at aluminum spot. I knew I wouldn't spell that right. There you go. This'll do. Monthly chart. A monster. 1, 2, 3, 4, 5, 6, 7 straight months. Trading along with the S&P 500. S&P 500 had 7 months back to back through this month. The only difference here is that aluminum has not yet made a new monthly high, but it's early in the month. Let's look. Chinese stocks most likely will rally. They are at their monthly support. Could be. Joseph, thanks very much, Bob, for the question report. I agreed them. Good. Enjoy, Joseph. My pleasure. Okay. Let's continue on. PHYS. PHYS. Is that like the Sprott where they actually hold the physical gold? Oh, it is Sprott. Yeah. This is if you're gonna buy gold on an index, on an exchange, this would be it. Sprott. I wasn't familiar with the symbol, but yes, Sprott, very, very good. Unlike the GDX or the unlike GLD, they may not necessarily have all the underlying bars. So, whereas with Sprott, correct me if I'm wrong here, they have the bars. They have the physical. Tom, you're saying they don't have bars? I think that's inaccurate. Could be wrong. All right, let's go to the weekly charts. Fact check me on that. TNX, the 10-year weekly yield. Tug of war going on here, folks. We broke out last week, and perhaps we're consolidating. We're retesting a breakout point. Stokes are rising. PSLV has physical bar. That's the silver version, no? So 10-year yield down on the week, holding support. A different view of the 10-year yield weekly chart. We're not looking so good. Inside week, no new high, no new low. So what's going to influence this weekly chart is tomorrow's non-farm payroll report. Do we roll over down below 20? If we get a weak number tomorrow, you should expect to see the 10-year yield get hammered. What I found interesting, though, the other day was with the ADP report, which came out horrible, just absolutely horrible. Ultimately, at the end of the day, yields closed up on the day. Strange. Moving on, the TLT, 20-year bond ETF, weekly view. Flirting with the breakout, we're up on the week. Volume, light. Indicators, strong. So really, we're at an inflection point here between yields breaking out or breaking down. Tomorrow's going to be a very interesting day. I'll tell you that. Get your popcorn ready. The tips, I just bought SPXS. That's the short ETF of the S&P 500, I believe leveraged, correct? Think this market is about to roll over and they can print anything they want. Quite possible. You know, the a couple of things that are out there. I mentioned China. Also, COVID, the infections. So I care more about deaths and hospitalizations, but you have, I found there was a report that came out today. Sweden is now barring Israeli visitors to Sweden. And that country is the most highly vaccinated. In fact, 25% of their population, not that it's a big population, but 25% of their population is, they've already had the third jab, the booster shot. So this COVID issue is still a thorn in the side of potentially for this market. It's shrugged it off of late. The U.S. dollar is just getting hammered this week. No great shock. Trade deficits exploding. Debt exploding. The economy melting down. This chart is in free fall. And this should be a catalyst for gold, but for whatever reason, it's not. It's not. I think we're seeing a lot of backing and filling on gold, a lot of non-believers out there. The VIX, weekly view. We have broken out this week. Again, to be fair, we broke out 3 weeks ago. It didn't hold last week. But here we are yet again, back above resistance now, support. NY Jets. Bob, a lot of COVID here in Florida, kids sick at school, etc. Hadn't that made you... You know what, I think that because you guys in Florida, you spend a lot of time indoors in the summertime because of the heat, you're seeing a spike there. I think that we're going to get our spike here in New York as it gets cooler because people spend more time indoors. I think that at some point in time, people got to come to the realization we're going to have to live with this thing. It's going to be like the flu. So, you know, what I found interesting is Joe Rogan and his treatment for his COVID. I don't want to talk about it because they'll ban the video, as insane as that is. But I think that we're going to have to be a little bit more open-minded in this country and deal with it. Let's put our big boy pants on. Anyway, VIX breaking out this week. The Dow Transports weekly chart. I love this chart. I love the chart, but one thing has got to happen for this chart to break out. And you need to see strong economic data accompanied by rising yields. And if ADP report is any indicator of how what the heck is going on here? There we go. If the ADP report is any indicator of how the economy is shaping up, we have a lot of problems. I don't know what's going on here today with their annotation tool. Okay. But I like to break out here. We broke out several weeks ago. We're consolidating against 14,500. Frankly, I think what we're seeing here are traders looking for good news. And they're holding steadfast here. Let's check out a daily chart. The daily chart today was rock solid. Rock solid. I mean, we've been putting in higher lows. Let's try this again with the annotation tool. And we are on the verge of breaking out here. I'm loving RSI on the transports. Volume is not good. So a catalyst to send the transports up higher may very well be tomorrow's non-farm payrolls. The Dow Jones weekly chart, a pretty good chart. We broke out several weeks ago. Back here, the week of the 9th of August, retest 1, retest 2. Do we get a continuation breakout? You're going to need rising yields. You're going to need strong economic data. So, you know, looking at this chart here of the transports and of the Dow Jones Industrial Average, I'm thinking that traders out there are betting that we're going to get better than expected numbers tomorrow. So, it's going to be very interesting. We saw a decline. You had which Federal Reserve was it? I forget what, was it the St. Louis Federal Reserve? I think it may have been. Or the Atlanta Federal Reserve today downgraded Q3 GDP to like 2.9%, some crazy number. So the GDP revisions keep getting worse and worse and worse. So be careful here. I love the setup here. I'm just not liking the macro environment. You know, could we see sector rotation out of tech into these names simply because those tech stocks are so overbought and they need to come in a little bit? Yeah. But when you take a look at the S&P 500, you got to wonder, I mean, do we go parabolic here? We're already at the upper band of the rising up trend channel. Can we go parabolic? No doubt about it. But that could quite very well be a blow off top for the S&P 500. Your Stokes, they're rolling over. But we've been here before. I don't want to come on here being doom and gloom. I've tried to short this market. It ain't worked out, man. So I would love to be the guy. Prior to COVID, you know, it was pretty easy to short the market if you were good at being a technician. It's very difficult to short this market when you have the Federal Reserve, truly the only correlating factor with markets going up. So I would love to say, you know what, nibble to the short side right here, right now. I'm not going to do it. I would rather see a blow off top. Show me RSI up here. Show me that my risk reward is consistent with what it was back in 2018. Right now, we don't have it. All we have is an expensive market. Remember, the Buffett indicator is extremely overvalued. We are nearly 3.9 points above the standard deviation of the historical moving average on the Buffett indicator. Just insanely overbought, overvalued, should say. The small caps. This is another area that is looking really, really good. We broke out last week. We're seeing a continuation breakout this week. What do these small caps need to continue up higher? They need good news. They need rising yields. And you may be saying, you know, rising yields, how does that help? The small caps, it's not about their numbers. It's about the perception of the economy. So if you see real yields move up higher or yields move up higher, traders are going to read into that and they're going to say, okay, the economy is growing. Time to buy small caps. Time to buy commodities. Time to buy, not necessarily commodities. Time to buy cyclical names, the banks, transports, Dow Jones Industrial Average. So small caps looking very good. The problem is on the daily time frame, we are at stiff resistance. Volume rolled in higher today than the prior couple of days, but still well below the moving average. MACD histogram continues to rise. So momentum continues to build here. Trip Qs, weekly view. RSI at around 75. A rough day today for the Qs. But on the week, new all-time highs. Daily chart, how's volume so far? Volume is horrible. Horrible. Daily chart. So I discussed this with members the past couple of days on Market Wrap. We've been seeing topping action. So really no great surprise that we had a down day on the Qs today. So we do have options positions on, but we're pretty neutral on the Qs at current. So I didn't take my hedge off. So at a time prior to COVID, you would expect to see a continuation move lower from this lofty perch. Today, who knows? Who knows? So double top on Stokes. We're beginning to roll over here. Down volume was light today, to be fair. MACD histogram has really lost a lot of momentum here. The banks. All right, so here's the argument against good economic data tomorrow. The banks are not pricing in higher yields. You need higher yields for the banks to move up higher. So while the small caps, transports, Dow Jones Industrial Average, they're all looking at a number for tomorrow that's probably going to be bullish, that is not being reflected in the banks, which are probably the most positively correlated to rising interest rates. And the banks are down over 1.75% on the week. Down volume is very light, to be fair. Let's check out a daily chart. 40,000 headsmen. The Fed just keeps pumping every one of them up with a bag full of that central bank banditues. Yeah, I've been calling them banksters, central banksters for years now. Abel, thank you for the super chat. ISRG, you got it, brother. Appreciate that. Thank you. The Fed uses words like forcing out the risk curve. They use those words as the backbone. Yeah, I mean, it's all Fed speak. Don't listen to what they say. Watch what they do. This is the reason why I start the Thursday night commentary out with this chart here. Here's their balance sheet. Just watch what they do. This is all you got to look at. Here, I'm going to share this. Save it to your bookmarks, favorites. So they may talk taper. There ain't no taper. There is no taper in here. Each week we continue up higher and higher and higher. This chart kind of reminds me of the S&P 500, to be honest with you. Going back to the banks. Let's go to a daily chart. We had an inside day today on the banks. Maybe putting in a higher low here. Let's memorialize this. Since I'm being technical as a technician, which I should, all right, we're right at support. All right, we're right at support. We need to see a breakout here very, very quickly. A down day tomorrow takes us back down below support. We'll probably come back down and retest $37 per share, which happens to be a price point I really, really like. Lower highs on RSI. RSI is on the verge of breaking down here. We need an up day tomorrow. It needs to be a good day, or else the banks are going to roll over. Technology, weekly time frame. We're still up on the week, but today was not a pretty day. This is like a shooting star formation on the week. Usually when you get this, it's a sign of a top. We're in a different time frame. We haven't had a 5% correction in over 200 days. So, I don't know. There would have been a time where I would have put on a short position had we flashed a bearish reversal trade, maybe scalped a trade to the short side. Right now, I don't know. I'm just going to sell options. That's all I'm going to do. I'm just generating cash flow and staying long on the gold mining stocks and selling covered calls. NUGT pays really, really good covered calls. AGQ, which we're going to go over as well, really good covered calls. GDXJ, not so good. XLK, technology held 158 today. Volume rose. So this is the second day of distribution in the past three. And when I say distribution, I mean institutional distribution. The semis. New all-time highs on the week, but we have reversed and we are now down over 1/3% on the week. Volume is going to trend in light. Daily view. We closed up on the day, but we faded. on very, very light volume. I mean, this has got to be the lightest volume bar, at least to the upside, for the year. And it is. It's the lightest up volume day of the year. Biotechs, outstanding week. This is a leveraged ETF, so keep that in mind. Yes, we're up 10.63%. Excuse me, 10.6%. I don't know where the 3 came from, but this is 3 times leveraged ETF. So anyway, really nice 2-week back-to-back rally here. Loving the higher lows on Stokes. We memorialized this several weeks ago. We made that observation. It's now paying off. RSI has broken out. Daily chart. We're going to get a pullback here. First thing that jumps out at me, these Stokes are just bonkers. At 98.26. Bet your bottom dollar that we're going to get a pullback, maybe a retest of this $69 per share mark. But this is a beautiful, beautiful breakout. We had a retest today. We broke out yesterday, retested today. Beautiful chart. But these Stokes need to come in. They need to come in. They're too extended. Speaking of gold, you know, what did I skip? Gold? How dare I? Gold. I went over the the monthly chart earlier. The weekly chart, I'm not loving. We should be up on the week. The fact that we're not is really disturbing, to be honest with you. You have the dollar that's getting hammered. Yields are down. What gives here? So this is why I'm saying I think that you're seeing a lot of backing and filling, indecision on gold, because when you take a look at it on a monthly bar, on a monthly time frame, take a look at these Stokes. They continue to weaken below 50. So I mentioned earlier in the program, I don't expect a breakout on gold this month out of this bull flag setup. I would love it, but I don't think it's going to happen. I think we have some more backing and filling to do here, more volatility. But man, when this finally gets resolved and we break out, I think we're going to break to new all-time highs in a heartbeat. It's going to happen within a few trading days. You're just going to say, I showed you the chart earlier of the market capitalization of Apple versus the entire precious metal mining sector. Apple dwarfs the gold mining sector. If you only find 1% of Apple money, or for that matter, S&P 500 money, find its way into the gold mining space, which has free cash flow and improving, in an environment where stocks are overvalued and gold mining stocks are undervalued, these stocks are going to rip. You're going to see shorts have their heads ripped off. So I don't like the weekly chart of gold. I wish I could say I did. I'm not going to speak my book. The monthly chart is looking okay. We're down on the month. Early in the month, it's only day 2. But I hate these Stokes. They haunt me because rallies tend to fade. Daily chart. Now, an optimistic view here would be this. If you charge me with saying, okay, give us a bull story here to tell. This is it. Nice triangle formation. We've already broken out above a resistance level. Can we get a continuation breakout? Probable. But remember that monthly chart. Those Stokes continue to weaken. That means it's continuing on a monthly time frame to lose momentum. And that continues to haunt me. So if you're going to buy the breakout, I wouldn't get overly aggressive with it just yet. And we'll revisit the monthly chart over the course of the next several weeks, and we'll see how it's beginning to shape up. Does it get resolved? So we could definitely see a breakout here. Moving on, we're losing time here. Gold mining stocks, these are the junior miners. For disclosure purposes, we are long, very long, of both the senior miners using the NUGT and the GDXJ. Beautiful chart. Yeah, we're down on the week, but all down weeks are not made equal. What does that mean? We got to take a holistic view of what's happened recently. We had a horrible, horrible bloodbath. Remember that gold flash crash, which was manipulation. We have rebounded somewhat from that. Gold is completely rebounded. But last week we recaptured support. This week, what are we doing? Despite the fact that we're down, we retested support and we're holding $42 per share as critical support on the GDXJ daily chart. Today, the junior miners did not fare well. They closed down. The however is that when you take a look at the senior miners as measured by the NUGT, which is a leveraged ETF, which we own, we're down on the week as we are with the junior miners. The however is when you take a look at a daily chart, bullish key reversal bar on the day. We closed up. So you saw some buying in there of the senior miners. Stokes look good. RSI consolidating, could easily break out. I was asked today, would I sell more covered calls on my gold mining position? I don't know if pre-drag is on. My answer was no. Not that you can't, but I tend to stagger my covered call trades. I don't sell them all at once because I don't want to cap my entire upside possible gains. So I'll do a pulse check of the market, and if they're decent premiums, I'll sell some covered calls. If the position comes under pressure or I anticipate it coming under pressure, I'll sell some more covered calls, generate some cash flow. But unless I have an overbought condition, I wouldn't want to go 100% capped on my trade by selling covered calls. So I'm open to it, but probably not going to happen. If you haven't sold a covered call yet, go for it. But I just wouldn't do your entire position. Silver miners down on the week. We're running out of time here. Daily chart down on the day. We'll leave it off with silver. Weekly view down on the week. We own this. This is the AGQ. They pay really, really good premiums on their options. Down on the day. I still like the chart. I think we're consolidating, getting ready for a breakout on silver. Let's do some chart requests. Folks, I'm going to take you back just for those that are just joining in. TrendSpider, 40% discount this week for the Labor Day sale. Use the link below. Don't use my discount code. Just go to their website. Use the link below. They have a 40% discount code. They have 7-day free trial offer. I give it away free to our silver and gold level members. And they have a demo tour. Stop by, take a look. Let's go to some charts. ISRG, that was ripping. I think that pulled back the other day, if memory serves me. I'm testing my memory, to be honest with you, making sure that we are still. There's no pullback here. A little bit of a fade on the day, but not much. All right, so ISRG. RSI monthly time frame, 76. It can go higher. This is a growth stock. Weekly view, love it. Loving the weekly setup here. New weekly highs. And for that matter, back to the monthly chart, new monthly highs as well. Daily view. All right, so I'm going to take the automated trend lines off. I'm going to show you the value of having them. So why did we back off today off the highs? Click of a button. We hit not one resistance level, but two. So just keep that in mind. We have resistance above. And if you're looking for an entry point, I would look for a retrace back down to this lower band of support, which is at current at around $1,051 and climbing. So that'll change day to day. So I would set up an alert here. And we'll keep it active for a couple of weeks. I like this chart. I like the company. Volume was okay today. It rose versus yesterday, but still below average. Oh, this is where I saw the selling. Back here. Okay. Thought I was losing it. Let's take a look at the raindrop chart. Nothing to speak of. Out of curiosity, it being a new month, let's take a look at seasonality. There should be more data than 7 years here. Let's go back. 17 years. August, not a good month. That wasn't the case this month or last month. September, a pretty good month, up 59% of the times. Let's get some recency bias. Let's go back to 2011. No great change. So September, a pretty good month, okay month. Obviously, the summer months of June, July are more favorable. To buy at the depths of December, that's a great time to buy because you ride the seasonality wave. But right now, it looks like you have a strong chart, a little bit of a bump in the road on a daily time frame, maybe a pullback, pause that refreshes, then load back up. You have a new weekly high, you have a new monthly high. I still like the chart. It's probably going up higher. For Joe's, how much time do I have here? 6 minutes. ENCUF. Encore. Rip in. Ain't this a little devil? Ooh. Nice shot. All right. So why am I all giddy like a 6-year-old? Here we go. Bam. Now this is just not a regular breakout. This is a monthly breakout. Now granted, we're only at day 2 of the month, but I got to tell you, this is one good looking chart. Great consolidation. Damn, good looking chart. Weekly view. Damn, good looking chart. So what's the play here? I can't chase it. Let's find some support levels. I'm loving 1.30 per share. We'll keep this active for a few weeks. Really good volume so far this week. Daily chart. All right, so what I want to point out here, and here's the other value of the automated trend lines. They're off now. Where do you book profits? Where do you think to look to book profits? Right up here. Create an alert. Because this thing can go parabolic in a heartbeat. I don't know how many shorts are in this name. If there are any shorts, it's a penny stock. And I want to know if it gets triggered a few times. This is how you could scale out of a trade. If it pulls back off of that resistance level, you book profits. You still have some shares. It rallies yet again. You could book more into that rising upper band of resistance. And up here you have resistance as well at 1.70 on ENCUF. 1.70 resistance. I like 1.30 as an entry point. Good looking stock. DSX for Franklin. That's not it. Oh, Dana Shipping, yeah. I haven't looked at this one in a long time. This is an oldie but a goodie. All right, so again, folks, the value of the automated trend lines. Here, click of a button. Boom. So we are at current. I'm going to add my own resistance line up here as well. This is a very good looking chart. Technically, we are breaking out so far on the month, but the algorithm's picking up other resistance levels above. I like this setup. The however is we could easily fade and close back down below my manually drawn red line. So I can't buy this right now, it being only the second of the month. So while we're breaking out, can't buy it yet. Weekly view, very attractive. Very attractive on a weekly view. Because we broke out last week. Now I can rationalize buying the stock with a stop loss right below the week's lows because it looks that darn good. Now, the question is, where are we going to have resistance? So what I'm going to do is, we know we have monthly resistance above. So on the weekly chart, let's now overlay monthly resistance. And that'll appear in dashed line. So in green here, dash line, monthly resistance. Above here, you have in solid line, weekly resistance. And up here, another resistance level. So I think that this could be bought. I like this setup. Nibble, add more on a breakout above resistance level number 1 at 5.31. Add more on a breakout and above resistance at 5.62. So on and so on. Daily chart. There's nothing not to like here. You know, if you said, what don't you like? You got to say it. Two things. We sold off the highs of the day. And we have resistance right above, and that's monthly resistance, no joke. So it's going to be an obstacle to overcome. But I don't see any reason why this can't be nibbled on. I would just stay small right now, build that position. Otherwise, it's looking good. Let's take a look at seasonality. I think that seasonality is not fair because this sector is just in the Baltic Dry Sea Index is just through the roof. So we'll go back 17 years here. August, not so good. September, but this whole sector's been abysmal for over a decade now. So I don't know how much seasonality is going to come into play. Really quick, let's bring up the Baltic Dry Sea Index. This is the cost of shipping dry bulk goods. Look at this. Amazing. Look at this rip. Double bottom setup off the COVID lows. Outstanding. Here's a quarterly view. Look at this consolidation. That's why you didn't see many months of 70%. If you had any 70% seasonality bars, they were all pretty even. That's because we've been in a consolidation for so long now. But now that's changing. We have broken out of a major, major consolidation. Game on here. We have a couple more minutes. CCJ for Tommy. I always want to say that this is, I always get it confused with Carnival Cruise Lines. Their symbol. All right, so Cameco, really, really nice. Really, really nice. So we had a bullish key reversal bar last month. Very nice. We've broken out this month. We identified, I've gone over this chart before, these resistance levels. We have broken out in the month of September, 2 trading days, above not just one resistance level, but 2. Keep in mind, it's early in the month. A lot could happen. Weekly time frame. Beautiful. Beautiful. Volume is already above average. 1 trading day left to go. RSI is broken out, validating price action. If you're looking for an entry point or a place to add, 19.41, give or take a dime. Great support level. If you get that next week, not this week, you want to see it next week. You want to make sure that we close above 19.41. A retracement back down next week, very sexy stuff. Then you could add more to the position. Not this week, though. Daily view. We're overbought. Daily chart trading above the 3rd standard deviation Bollinger Band. Warning flag on the track. Can it move up higher? Yes. It will not last, though. You're going to get a pullback. If you're long, no reason to go selling. If you're in it for an investment, if you're in it for a short-term swing trade, then you may want to think of scalping some profits. RSI at current, 70, nearly 75. It can go a lot higher. This is a good-looking chart from a macro, holistic view. Monthly, weekly chart time frame, very, very good. I think it's going up a lot higher, longer term. And with that, folks, yeah, Tommy, thanks. Smash the like button if you would. Everybody have a great night. Have a profitable trading day tomorrow. And I'll talk to you soon. Be well.